Hello. Welcome to my channel, my dear friends. My name is ABHILASH and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. And my dear friends, this is the 15-minute chart of gold in front of us. Yesterday, there was not much volume in the market and gold was trading in a narrow range. After some time, there was a little drop, which was also quite natural. Okay, yesterday we discussed about three support levels. Our first support around 3355 did not work, but when market came to our second support 335248, we saw these massive green candles. Okay, and obviously these candles were not natural. Okay, and what was the reason? The reason was sharp fall on the chart of DXY, and this was the main reason I told you guys to keep your one eye on DXY, because of late things are a little bit unstable or volatile with DXY, as a result of which we can see the impact on gold. Okay, you can see dollar slips after Trump fires Fed's coup. Dollar index fell below 98.3 on Tuesday, giving back gains from the previous session after President Donald Trump announced the removal of Federal Reserve Governor Lisa Cook over allegations of mortgage fraud. So this was the main reason why we saw huge drop on the chart of DXY. The candle by candle correlation doesn't exist, but whenever there's a big move on DXY, we see the opposite move on the chart of gold, and this was the reason. And if you look at the market sentiment of gold, you can see gold rises to 2-week high. Gold prices rose above 3370 per ounce on Tuesday, reaching its highest level in 2 weeks amid heightened political uncertainty after President Donald Trump fired Federal Reserve Governor Lisa Cook. So this was the main reason why we saw these massive candles on the chart of gold. Gold made a high of 338687 after the gold came for retracement. Okay, so many things happen, but the problem is that gold is still trading inside the range. Okay, from action point of view, yes, many things happen, but from a trader's point of view, okay, sadly the market is inside the range, and you can also guess it very well that whenever market is stuck in a range, number of trading opportunities are very limited. You can see the number of lines have also reduced on the chart of gold. Okay, so let's discuss one by one whatever we have on gold today. So the yesterday's support of 3352 335248 is still very much valid. The blue box here, okay, we had FIBO, we also had price action, previous resistance working as support, and also 50 is a round number. So today also we can expect that if market drops, 5248 is a good support. Then yesterday also we discussed about a support around 4442 area. Remember the blue line here? Okay, this one is also very much valid. So during the day, if market drops, these are the best levels. But the problem is that the current market price is far away from these two levels. So if we want some immediate levels, then you can look for a support around 336765. The yellow box that I have drawn here, 67 is the first support on the chart of gold, or the immediate support. And if you're wondering how we have derived it, then let me show you. Okay, here also we have used Fibonacci here. So we can see our Fibo, our Fibo is more or less a good job. I won't say a very good job, but we can see the market has respected Fibo, so we are expecting the same again. So around 67-65 area, we have Fibo 50% retracement level, and the previous resistance will also be working as support. Keep in mind 65-67 is not a major level. For example, if you see the market going down with a candle like this, if market forms a big red candle like this, then 65-67 may not be able to hold the market because it's a minor level. Every chart has some major levels, some minor levels. 65-67, it's an immediate level but minor level. Okay, so we can expect to bounce, okay, if market behaves like a normal market. Okay, high selling pressure, it won't be able to hold. Okay, so this is the first level where you can look for a buy as a day trader. Okay, the second buying opportunity is around 58 area, 58-59, 3359, 3358, because of FIBO 78.6% retracement level. Okay, so these are the two levels, okay, on the chart of gold where we can look for a buy as a day trader. Okay, now we can see the market is going up. Okay, see, overall chart is inside the range, do not forget about it. Okay, because there is no denial. Higher time frame traders are right now very much okay frustrated because gold is stuck in a range. The traders okay who usually prefer to go for hourly time frame, 4 hours time frame, are also frustrated right now because okay there is no clarity on gold. Okay, so whatever we are discussing are only for 40 to 50 pips because this is a lower time frame. So as we can see right now, gold is going up. So okay, after some time, if you see gold is going up, okay, then you can look for a buy above 3379. But if you are looking for a safer entry, then it's okay preferred to go for buy at pullback only. Means when 3379 will become, or 793378 will become the support, then you can enter because you'll be going for a safer buy. You can buy at pullback here later on, because now I feel that after 30 20 30 pips market will come down again. When market will come down, this may become a new support. If it becomes a new support, then we can look for a buy around 7978. Okay, and another support is around 74 area as well. So these are all minor levels. Okay, these are all minor levels where we can look for a buy as a day trader. And obviously, okay, we can look for a buy above 3386, sorry, 87. Okay, 3387. But be careful. Yesterday also I said if market goes for a breakout after consolidation, then only go for it. Otherwise, just avoid. Okay, for example, if the same move continues, okay, then there's a high chance that market will be tired, and after hitting 88 89 market will come down. Okay, so it's better for us to go for a buy, okay, when there will be a consolidation. For example, market goes up, fails to break it, market consolidates here. After that, when market will be going up, that will be a bigger move. So wait for a consolidation. Without consolidation, it's better to avoid. It's better to wait for a pullback when the same level will become the new support. So these are the levels on the chart of gold where we can look for a buy. The good levels are 50 to 48, then 41, 40 to 43, but those levels are far away. So if you want immediate levels, okay, then we have support around 65 67, then we also have a support around 58, but they are not very strong levels. And if market remains within this tight range here, then we have weak levels like 74, then we have a level like 79, okay, where we can look for a buy at pullback. Okay, and buy at breakout above 87 only if market goes for a breakout after consolidation, because without consolidation it will be high risk. And this is okay the chart of gold right now. Okay, if you're confused, if you're a beginner, then do not trade on gold right now. You can find opportunities outside gold as well, because see, we are here to trade, okay, so that we can make money. We are here not to trade only gold. Okay, so do not be obsessed with gold if you fail to understand the chart of gold, because gold is not giving us good moves. Okay, recently, okay, the chart has been very unpredictable, so don't no need to gamble with your hard-earned money. Okay, think about your family. Okay, then only place the trade. Bye bye.